On something inside here because on Eurodollar, noticing something here that I think I definitely wanna share my thoughts on. Right, as a new developing trader, I was able to understand this also. Right, if we look, there's on a 50-minute chart. Right, again, the price fractal, and yes, I just typically wait for the higher time frame from the daily, 4 and weekly liquidity pools to be traded into before engage. But there's also obviously from the 115 and go down. Well, really the 1 and the 15, it have a lot of stories are being told. So we on the euro dollar, we have a clear range from this high to this low. Right, this was Friday. I think this was Friday's lowest at the bottom here, and at the top, this trend line at the top there, the buy side liquidity pool trend line, that's Friday high, right? But if you notice, for the evening session, which started 1 o'clock here, we just put up with a call. Right, this is 50-minute chart, so probably not exactly when you want where you want to, but that's small thing. If you see this gap right here, this fair value gap here, if you notice, it didn't close it in 100%. They left it open. I'm gonna just put it right there, and we saw when Monday trade down underneath the initial low that was responsible for this up move, so it had liquidity here. We saw New York sweep that liquidity and be trading up, right? And you notice how the fair value gap here, this our fair value gap now supporting price after it passed through a couple of times. It's supporting price here. You see this price action here came down right to the top of it and then it traded off. And then we see a fair value gap in here fill. A fair value gap here was created and not fill. And the higher time frame perspective with the buy side still in play. When you see things like that, where gaps in price not closing in fully and it being respected, and the premium array is not, you're not seeing like aggressive move, like aggressive price rejecting it aggressively, that indicating that that particular day that you're in is, even though it's tight in a tight range, it's showing signs of wanting to move higher. So definitely being a seller inside here, obviously not optimal. And the question is, how would you know beforehand if you should even engage in selling? Because you see, it had some selling opportunities in here, but this was, I would say, high risk. You know, it wasn't as smooth as, like this leg here. See how smooth I was on a 50-minute chart, nice and smooth. We see it have so much wick, so it showed that, yeah, but you want to go up, but you know, it just offering it lower, lower, lower. How would you know when to engage? When you see fair value gaps, discount fair value gaps being respected multiple times. Here, it didn't close it in. Here, it didn't close it in. It had opportunities to close it in. It didn't do it. It didn't do it. That is signs that, okay, that pretty much bullish. And you don't want to be a seller inside of there. You don't want to try to get these, encapsulate these kind of choppy sells. Because it doesn't, unless you see like this candle in here at 8:30, you see that big, aggressive 50-minute candle. Unless price giving you something like that, like we saw at the opening of London, that is where you would want to be. That the kind of price legs you want to be in. Now. But when you're seeing these discount fair value gaps being respected and created, you don't want to be a selling conditions either. And obviously you don't want to be selling. You don't want to be a participant at all in the market when we in a range, a tight range. It's not optimal, in my opinion, as a developing trader and new to the market. Those things are optimal. Whether you're experienced or not, it's not optimal. It have opportunity you could get stuff, but it's not optimal, I would say. You know? And especially how last week went where we saw how price was really giving us a good distribution in a certain direction. That is the best condition to be in. Not all the time you'll get conditions like that, obviously. But I just giving you an example now. And this is EU. I typically be on GU. GU is where I really do my stuff. But EU also give me a setup, not to take, but for the example now. If you look at GU, again, because of the news we have this week, is why I would say, price giving us this tight range. even though it's typical of a Monday, we see just a whole lot of nothing going on inside of here. This leg here that I could have take, but I didn't because it wasn't the strategy. Apart from that, we have nothing in here really to work with, you know. And as far as I see in this price action inside here, it just loading buy side and loading sell side, you know. It's not giving us anything really to work with. And the example I wanted to make in this video, I get it better on EU. You see, EU threatening to move up into the Monday high. I would only be a participant if like let me say 10 o'clock or like the New York range had give us New York kill zone had give us movement into here, then I definitely would have been interested in being a seller, you know. But because it would have been the deviation, whether I be a right or wrong, you know, or would I be a seller. But we coming to the end of the time frame I work with, and we still not really seeing that much of a push up into the deviation I would engage in. As I stated, the deviation they loses strength after noon. So after lunchtime, the deviation although I never back test to see anything with it. And well, a couple times I saw it, its price respected it after, but I really believe it's something else and next macro that was responsible for that. And I would not recommend using any deviations after 12 lunchtime, right? So anything between anything up until 12 you could use it, you know. But after, I wouldn't use it. So if we somehow get up into here before 12, then I would use it. And I actually want to get some not favorable trades with it so I could have examples where it didn't work to where we would have usually it didn't work how we usually expected. I definitely know I would still be able to be in a position to make something for that day. But in terms of our target and what we look for, I trying to get a couple trades that didn't pan out with it so I could have a good ratio of positive and negative now, because it would give a better understanding of how trading generally be, and not give false expectation and thinking, okay, we could just do this, you know. So I just wanted to make this next video just to illustrate when to participate and when not to participate. So I guess I would title this high risk, high resistance, no trade, not ideal trading condition, something along those lines. So see you guys again in the next video. We now finally reach up to 1 standard deviation. We still have some time. It's 11:36. I'm going to enter here just to illustrate why the deviation, why it shouldn't get in. If I get stopped out, it'll be a good example on why you shouldn't use it when it coming down to this time now. So the next green candle I want to sell, and I would allow whatever to happen to trade through. So the next green candle, right, I sell, and you would see. I really want to get some examples of when I wouldn't use it and why I say not to use it. And you would see why here. So I'm gonna just run the fib up, typical stuff. Here. We traded up into Friday's high. I just go up to the 1.5. 1.5 SD. right. So we clearly see we had a big gap here in price. So obviously we know why this going up in here. But again, just illustrating the deviation, why it's optimal to use it during the kill zones, preferably if it get down to London at the deviation of interest, and when to stay away from it after a certain hour. If you take a look at the dollar index filling in a higher time frame area interest, daily fair value gap, we're now trading to Friday low, and this is a reasonable, you know, drop to fill in the imbalance and whatnot that we have laying underneath there. I can easily just hypothetically do the entry where I take the tool, this tool here, and do this, and put the 20 pip, put the projection, but just to save face for the if I get stopped out, I wouldn't see the red. Yeah, that's not really a good mindset to have, because you don't want to become the guy who afraid to lose now. Obviously, you don't want to lose. You're not going. And the demo, yeah, just illustrating our point here. This is the purpose of the channel, to illustrate our point. Need to get somebody wins, somebody and some losses with it. We clearly have a point to illustrate with it. And I don't think, like, if I did the whole hypothetical trade just now with the tool, it wouldn't have had the same psychology with the trade, if that make any sense. So ideally, I should have waited about 5 pips up. As I normally say 10 to 15 pips in, but I really wanted to illustrate the point before the time up now. So we have about, is 11:41, so a little bit of time before it's noon. So, but ideally, the rule is the area interest we're looking at the price to trade up into. We want to see about a 5 to 15 pip move in. This is why, as I always say, about a 5-15 pip move in, and then a breakdown now. So we had to trade into it a little bit, entice some people to buy on breakouts and whatnot and what have you. But typically a 5 pip move in would have us here, and we dropped a smaller time frame. Then we would be looking for like a displacement like this here. Then the entry would have been subsequently on this candle to go short. But we just illustrating a point, because again, everything, any entry had to be under the guides of SDs, this standard deviation. So, and this also was an area that I would have entered had we trade up into it within a particular time. This is outside the time that I would have entered. So if we had reached up in here like around London or New York, yeah, then I would have been interested in it. But coming down to the end of the strategy, strength and time and whatnot, so just take an entry to illustrate the point, as I said. So I just let it play through, and I'll come back to see how it, if it stopped us out, or the results of this particular trade. I'll go down and close the trade now. Again, just to illustrate how the deviation, it's not optimal to use it when price don't trade up into our area of interest in the kill zones. All right, price did trade up here, and at I believe it was like half 11, 11:45 or something like that.
Um, yeah, 11.45, and it just gave a 10 pip, not what we look for, but I mean, it's still something, but it's not what we look for. But I just close the trade here because you like it up, it go in our direction. It could happen for the evening session, but again, that is not what the strength of the deviations for. But I just wanted to include a time where it didn't work out and I was able to get one here today. Because I stressed before, don't use it after a certain time frame or when it coming close to a certain time. This is the time. When you see it coming close to lunchtime, New York time, don't use it. Right? At least from my studies, I've noticed it doesn't be strong. It doesn't be as strong as how it would be in the morning session. So I just close the trade here, and we look forward to tomorrow to see if we could get possibly a high Tuesday high. Maybe Tuesday could be the high of the week. We don't know because of this week have a lot of news. But if we get opportunity Tuesday, we definitely will take it. So see you guys later, man. Enjoy your day.